Trump says too late Powell must lower interest rates after weak ADP jobs report. And to Trump's point, we did get more poor economic data this morning on the labor data front. You can see unemployment claims came in at 247,000 when we were forecasting for that number to come back down from last week to 236,000. This is 2 consecutive weeks where we've seen the jobless claims or unemployment claims spike higher than analysts had forecast. And in other pressing news, Trump holds a call with President Xi, the Chinese media says this morning. This initially sent stocks higher. Take a look at the S&P 500, the NASDAQ, the Dow Jones, but you can see them crashing back down because of the concerns about the labor data and that tension between the chairman of the Federal Reserve, Jerome Powell, and the president, Donald Trump. And with this labor data this week, we do see the dollar index threatening to take out its fresh lows. And could this potentially be a bigger breakdown on the Forex side of things? We'll talk more about Forex pairs later in this video. My goal with these videos is to share up-to-date market analysis of what's going on. I do research and prep for each one of these videos. And all I ask is if you enjoy my free content, consider hitting the thumbs up button and subscribing. Let's jump in. So initially, stocks moved higher off of the news that Trump and the president of China were speaking, but then faded very quickly. This is a clash of economic data coming in soft, which I'll show you in a bit, and of course, the excitement around potential tariff stuff lifting a little bit. With the US and China tensions relieving in any way, that would cause markets to feel much better about the forward-looking expectations of trade dynamics globally. The stock market has been on a heater here recently. I am still bullish on this, but a bit cautious after some of the recent economic data that has come in. I'm definitely more interested if we can get some pullbacks first. I'm already long the Russell 2000 index. Specifically, I'm long IWM, which is a Russell 2000 ETF that I can trade on my brokerage account. I'm still long, and I think that this has plenty of upside to continue higher. My goal here is that if we can take out these previous highs, I'll look to trail a stop loss and share this with members inside of our VIP service. Of course, every trade that I take, whether it be gold, silver, indices, Forex, options, or stocks, whatever I'm trading, I share the full context and breakdowns within our VIP group. If you're not a member of the group already and would like to be, it's a great time to join, considering we're doing a 45% off discount right now. And to take advantage of that discount, make sure to use the first link in the description down below to speak directly to our support team about how you can unlock access to all the signals that we're sharing. Now, unlike most signal services, I share real track recorded results. I'm a verified trader, and I tell you that not to brag or to pat myself on the back, but as a service provider in the industry, I find it very important to back what I share as a service with stats of what I've been able to do in the financial markets. So if you're interested in checking out our signal service, joining our chat rooms, our coaching calls and webinar services, all of that is available to members, and you can find out more information down below in the description. Don't miss out on that 45% off discount. It is the biggest discount we do all year long. And so with this consistent downtrend in the US dollar, I have a question for everybody in the audience, and I'm going to do my best to stay unbiased in this as I possibly can. Who do you think is right? Trump, who thinks we should be already seeing rate cuts from the Federal Reserve, or Jerome Powell, who says we basically need to wait and see what the tariff ramifications are before we make a decision on rate cuts as not to impose inflation spikes. Now, I'm going to break down, in my opinion, a case for each one of these. And what I want to hear from you guys in the comment section is, who do you think is right? Is Powell too late, as Trump accuses, or is Powell doing the right thing by waiting to cut interest rates until there's more clarity on tariffs? Now, I am going to be a little bit biased on this topic because we now have a little bit more data that we can base our decisions on. And the data is not looking great. Let me show you what I mean by that. So this week we had, as I mentioned, some unemployment claims data that came in soft. 2 weeks in a row, actually, where claims for unemployment were higher than expected, showing a little bit of contraction in the labor market with our weekly reported numbers. And while job openings were better than expected, we are still seeing a decline in job openings on a persistent basis in the last several months. And it's hard to deny that ADP was a horrible number. We hit 37,000 jobs compared to the forecasted 111,000. That's following another month where we had really poor numbers as well. This is not a very good sign for the labor market. Now, do I think we're crashing? Not quite, because the unemployment rate in the United States is at 4.2%. That's very low on a historical basis. And if we go out 5 years on the unemployment rate data, check this out. You can see that we had very, very high unemployment rate temporarily in 2020, but we've persistently kind of come back down, and we've stayed low since 2021, 2022. We've had a relatively strong labor market for several years now. And by the way, it was good before COVID, and then COVID happened, and then it kind of mediated over time through the years back to where it's at. This is a good level of unemployment rate. So to some credit to the Fed, the unemployment rate is not in a dire situation, but the thing about unemployment data is that the trajectory matters a lot. If we start to ramp up, it's a very hard thing to stop. So the Fed is saying we need to wait for tariff clarity before we can cut interest rates further. And the president is saying, labor data, do you really want to wait for it to break before you make a move? Because here's the thing on the other side of the Fed's dual mandate, inflation. Let's take a look at how that looks. Well, when we look at inflation, there's some serious progress here. We are at 2.3% year over year on the CPI. That is very close to the Fed's target inflation rate of 2%. And so the Fed is saying, hey, we don't want to risk inflation, but inflation is looking pretty dang good compared to where we have been. And so the criticism that I can understand from the Trump administration and from others is that the Fed should be cutting interest rates, because are you really going to risk the labor data breaking because of fear of inflation when inflation has been trending directionally down for some time? I understand that point of view. However, to the Fed's credit, tariffs can indeed contribute to inflation. And this conversation, while debated as to whether or not it can cause persistent and consistent inflation, it is pretty much accepted in the economics world that for the most part, it does cause some level of inflation. So to the Fed's credit, uncertainty around tariffs is making them kind of cautious to make a move. But at this point, now we're starting to see economic data that is suggesting it's time to cut rates. Let's take an objective look at the US economic heat map to help guide whether or not the Fed should cut rates. If we take a look at the GDP numbers that we saw, of course, this is a little bit of a scratch one because there was a huge amount of imports front running the tariffs that caused the GDP growth to dramatically, sharply move lower. So let's just move past that one and look at the rest. Manufacturing PMIs missed expectations. That is in favor of rate cuts and bearish for the US dollar and for stocks. The services PMI number also missed expectations. That's bearish for those two as well. PCE came in flat, so we'll move past that. And by the way, I'm looking at the yellow text ones, which are things that have been reported in the last 7 days. Continuing on, let's take a look at our jobless claims this week. They were not good, and they were not good the week before. These favor rate cuts, and they are weak for the dollar and weak for stocks. Let's keep going. Job openings, this was positive. This was a light at the end of the tunnel, I suppose, for dollar bullishness and for stock bullishness. However, ADP numbers were a big miss. And so what we're seeing here is a lot of the recent economic data, mortgage applications, right? These things are suggesting weakness for the US dollar, on the idea that rate cuts are likely coming down the pipeline. So in my opinion, when I look at the US dollar, the path of least resistance is now lower. And so I've shifted from kind of being neutral on the dollar, if you've been watching my channel recently, to now feeling like I actually think the path of least resistance for the dollar is lower. We've been in a downward trend. We've just recently consolidated for the last 2 months or so. But now it does look to me that the economic data is suggesting more downside for the US dollar. And so I have now pivoted back towards being bullish on gold and looking for a breakout through these all-time highs or a pullback into this area. So I am a bull on this area and looking at this area as well. So I'm looking for opportunities to get long gold. And again, I don't love the story for the dollar, and I do think that rate cuts are likely coming down the pipeline. And by the way, if you get developments on tariffs, that is also, in my opinion, another excuse for the Fed to cut interest rates. Because if that becomes a diminishing concern for them around uncertainty around that, I think cuts are even more likely. So to me, in the back half of this year, I do think that rate cuts are coming. I think we could get 2, maybe 3 rate cuts, depending on how things develop with the tariffs. So we'll see if I'm correct about that. But the market, again, you can see a huge move higher in silver here today. This was a massive breakout for silver. We also see oil up today, back to that resistance point we've been watching. Take a look at gold here. Like I said, I am an interested buyer of gold if we get pullbacks on this one, maybe down to this 32.30 or a breakout of this 34.30 level. So I'm watching gold from a bullish perspective again, which I have not in a while, but I am waiting for price action to give me kind of a more clear indicator that we could continue moving higher. Taking a look at the economic surprise meter, you can see that the US dollar is one of our weakest on the list. Actually, it is our weakest of the major currencies, right? So looking at our major currencies, US dollar is the weakest, and some of our strongest outperformers on economic data points are the UK. We're looking at, of course, the Canadian dollar now popping in here, and the New Zealand dollar. These are getting stronger readings. So these would be currencies that I'm more interested in buying, and then currencies that I'd be more interested in selling right now would be the US dollar. This morning, we also got the ECB cutting their interest rates from 2.4 to 2.15. Trump also threw a fit around this, saying that how has the European Union cut interest rates so many times, but the US has barely cut at all, which I think is not completely fair, considering that the European Union has also seen significantly less growth and is not nearly as resilient of an economy as the US at this time. Remember that central banks cut interest rates to help save the day often, and the US is not in a situation where the economy is falling apart, but we are now seeing signs of cooling, and I do think it's appropriate that the Fed cuts rates. The bond market now sees a 70% chance that in the upcoming 30th of July meeting, we are going to hold interest rates steady, with a 29% chance that we actually see rate cuts for the first time in a while in the 30th of July meeting. Now, I'll say this, depending on what happens with NFP tomorrow, these numbers could move dramatically. If we get a really weak print on NFP, this number is going higher, this number is going lower. And if we get a weak or a strong NFP, this number is going to probably stay flat, and this probably number is going to stay flat. So to me, I see some potential for this number to rapidly rise in terms of the probabilities of a rate cut compared to this one. So, from this one rising. So I think that that's a really interesting thing to keep an eye on in the coming days is, of course, the NFP report, the unemployment rate. Those things will be very telling, because we have a little bit of a checklist here that I want to show you. So far this week, we've had some interesting jobs data that has come out, and let's do a little bit of a checkpoint on how things are going so far. So the JOLTS job openings numbers came in really strong. That was good, but ADP numbers are now showing some serious weakness, and the jobless claims numbers this week were also showing some weakness. Now, the last two are question marks. Is unemployment rate and NFP on Friday going to come in strong, weak, or somewhere in the middle? That's going to tell us pretty decisively, in my view, what the labor market is looking like. And I'll tell you this, for those prepping for NFP tomorrow, if you get some really soft, some weak NFP numbers, to me, that suggests further downside for the dollar, strength for gold. And I do think at that point, Powell will kind of be put in a position where, okay, we need to cut interest rates. And so I think you have the potential for some serious change on that front. However, we don't know what these numbers are going to be. We could get upward surprises tomorrow. We could see unemployment rate, stay strong and NFP stay strong. And then we're back to kind of a mixed view. And in that circumstance, yeah, we maybe just kind of wait and see. And so I'll tell you my opinion on the matter. I think that the Fed should cut interest rates because I want to compare two numbers for you. So here's the thing. Currently, the Fed has a 4.5% target rate in terms of their interest rate. That is pretty restrictive when you compare it to a 2.3% CPI inflation rate. Now, when CPI was 4% or CPI was 5%, having an interest rate that was higher relative to that number was helping to get inflation down. Clearly, they have seen some really good progress, and I think the Fed has done a pretty good job given the very difficult circumstance. So I don't want to come across as just polarizingly, super pro-Trump on this. There are things about Trump that I like. There are things about Trump that I dislike. But when it comes to this particular thing, interest rates, in my opinion, are still very, very restrictive relative to where inflation has come down to. I think it's appropriate that the Fed looks to cut interest rates. I don't think that is, even if we are not necessarily going to get massive interest rate cuts, I think that this spread has gotten pretty big. We've made serious progress on inflation. And I think that, again, with the labor market showing some signs of weakness already, and that's not to mention we also had services and manufacturing PMIs this week that were weak. There's signals here that I think, why risk it? We could probably come down a little bit off of our interest rate, and that would be a nice way to kind of weather this storm. Now, of course, if tariffs ramp up again, that will look really foolish, and that's what Fed Powell is trying to avoid. And so I'm not just here just outright criticizing. I understand he has a very difficult job. If Trump has a freak out panic mode with President Xi or with Europe or something, and inflation goes sky high again due to, dramatic inflation causing tariffs in the next few years, then yeah, Powell could look really silly if he cuts interest rates right now. So I understand the perspective of the Fed, but I also understand that the data, in my opinion, leans towards let's cut rates. And you guys know, if you watch my channel, I'm big on the data. And you know who else is supposed to be big on the data? The Fed is supposed to be data dependent. And I point this out because this was a post from November 7th, 2024. So that was last year. And the Fed, as recently as then, has hammered on the desk that they are data dependent. And in my opinion, and many others, I think the data is starting to suggest that maybe some level of rate cuts are appropriate, even with a little bit of uncertainty around the tariffs. And so that's where I think, the Fed is wanting to be data dependent, claiming they want to be data dependent, but then saying we're not going to wait for inflation data to come in from tariffs to make a decision there. We're going to make the preemptive decision to not cut interest rates because what might happen to tariffs. You can't have your cake and eat it too. And this to me is a bit of a hypocritical move from the Fed. Now, again, I'm not, like I said, I understand the plight of Powell and Fed, and I think that they've done a pretty remarkable job in recent years. But in this moment, I personally lean towards, I think rate cuts are coming. I think that they're appropriate. And so that is why I lean bearish the dollar, bullish gold, and I think stocks can do well. Specifically, I'm long the Russell because I think that this part of the market could do really well if the economy holds up okay and we start to get more rate cuts, as smaller companies are more sensitive to borrowing costs imposed by the Federal Reserve's interest rate. Today's video is sponsored by Vantage Markets. If you're somebody outside of the United States looking to trade pretty much anything in one singular brokerage and a welcome bonus sounds like a good offer to you, then check out today's video sponsor, Vantage. Down below in the description, if you use our specific promo code, they're offering a really generous welcome bonus to traders looking to trade on their platform. They're well regulated. They offer a welcome bonus. Like I said, they have great trading fees, and you can pretty much trade anything on this one brokerage. I'm talking about XAU USD, stock CFDs, cryptocurrency CFDs, all sorts of different things, all in one singular brokerage. So if you'd like to explore them and see if they're right for you, make sure to use the link in the description down below to take advantage of that welcome bonus that they're currently offering my subscribers. I'm really curious to hear what you guys think on this, and I hope that I'm not being too I promise that most of this is based on my outlook in terms of the economic data. I'm trying to leave political bias to the side as best as I possibly can. And like I said, I am definitely not, always for or always against what the president currently stands on or what Powell says. I think it's important for us to kind of just look at what we're dealing with in terms of the economic data and let that guide our decision-making process. However, I will make a quick stand that I adamantly oppose personal insults from two, powerful entities in the markets. And I don't think that that's necessarily appropriate or needed in this really important conversation that we're having about interest rates. So I wish we could put some respect on both sides of it. I think it would actually smoothen things out a little bit more. But hey, you know what? Market doesn't necessarily care what I have to think. And as traders, we can only trade what we're seeing and follow along with the trends that we're acknowledging. I also wanted to share a clip of myself, Miko, and Marco from today's live stream talking about some trade setups that we think are really interesting right now. Check this out.
So for me, a top pick would be the pound dollar, where I did take a buy setup this morning, yesterday evening, with like 110 pip stop loss. So with a pretty big stop. But my thinking is, should be another zero there. But my thinking is the pound is very strong on the edge finder. It's getting some very good fundamental data, and the dollar is getting some bad fundamental data. The ADP came in pretty bearish, and I'm also counting on NFP and unemployment being bearish for the dollar as well. So, the current numbers are just very bullish for the pound and bearish for the dollar, and I'm betting on that bearishness on the dollar to actually continue. Another reason for the pound trade is that we have broken out of this, let's say, resistance that we had. So we broke this high, and this one broke out, retested it, and then continued. So I think that's a bullish technical setup. And yeah, pretty much just trailing the position now. Hopefully, if it does continue to the upside, I'll just trail my stop loss. And once the market does decide to reverse, I will be out of the trade. So that's it.
I love it. Yeah, pound dollar looks amazing. We've all three of us have talked kind of about Generally seeing upside for that currency pair in the last few weeks. It's been nice to watch it keep going, although I wish I was in it. I'm not in that trade. I have other ones that are doing okay, but yeah, pound dollar continues to push higher. Miko, same question to you. What do you think about either dollar pairs or yen pairs, whatever you're watching most right now? What's your chart of the day?
Yeah, so at the moment, currently long on Aussie CHF. I was actually long on New Zealand CHF last week, but I got trailed out of that position. But fortunately, being able to get into Aussie, and a similar idea to the reasons why I got into the New Zealand CHF last week. Markets coming back from all-time lows, expecting some type of pullback based on that. And typically price does tend to do that every time we do see all-time lows for Aussie Swiss, New Zealand CHF. We tend to see really big recoveries, so the plan is kind of take advantage of that. We've had a lovely pullback, really corrective price action, which tends to mean prices like to break higher. I'm kind of anticipating a bit of a low forming here and then taking advantage of that move. I'm pretty bearish on CHF as well, and Aussie CHF kind of look like the better one for me. So I've hopped into a trade here. I think this has some room to run. Hopefully we can push on. And if we can clear some resistance, there might be some opportunities for additional entries as well. So I think this has a lot of room to run, so we'll see.
Fair enough. Yeah, I think one chart of the day for me, just to add to the mix, because we talk about it frequently and we got to give it its flowers, is silver. Did you guys see the move in silver here? It's been pretty incredible. We've got this breaking out. Mika, you've talked about this level quite a bit on the stream. We're sitting here or putting in a fresh high. I'm curious to see if we get any sort of retests on this one. Yeah, I mean, this has got to be, in terms of a chart of the day, probably the most interesting one I've seen. And I know a lot of the audience who's watching right now is big into trading things like gold and stuff. But we've talked about on this show, especially if you're a weekly viewer and you've seen our segments before talking about this, we take this as a positive indicator for metals in general. When you have silver kind of taking leadership, that tells you that it's kind of like when small, more speculative stocks are ripping hot in the stock market. It's actually a good indicator that the rest of the stock market is likely going to do well too. Because if the high risk, high speculation stuff is doing well, just shows you that investors, traders, whatever, are interested in that area of the market. Well, silver taking off like this, could signal some upside for gold as well. And like I said, my favorite scenario with metals is when silver is actually leading and outperforming gold. To me, it's an extra confluence factor that, okay, you've got some nice strength from the little brother, if you will, to gold. I think I want to come back to this because this is a chart you've talked a lot about with silver. Is this one that you're watching for setups on at all?
Yep. I'm definitely watching silver. I was actually watching it earlier this week because we had that initial breakout. Actually, when was that? That was on Monday. So I was looking for the retest of this area because I wasn't too keen about silver in this range. I wasn't really trying to look for anything, to be honest. But once we did get that breakout at the start of the week, I was hoping for the retest then. Of course, this has happened now. So my plans have slightly changed to more focus on this high, which basically lines up with the level you just mentioned, which is around 35, just below it. So yeah, a retest there looks good. I think there's a lot of room to the upside. I'm kind of looking at this kind of whole range for silver, and I'm potentially kind of looking at that kind of height, if you will, and possibly seeing a breakout of a similar size to the upside. And the next big psychological level for silver will probably be 40. We've cleared 30. That's in the rear view mirror. Now 40, I think, could be a logical target. Of course, it's more of a bigger swing trade, but the idea is that there's a lot of room to the upside. So yeah, silver now clearing resistance there. As long as we can stay above, I think opportunities for a big pullback and a retest of 34.8 roughly. I think that's a decent opportunity.
I hope that video was helpful to you, and I also wanted to make sure to share our Telegram channel with you. Every day we are posting up chart markups and analysis and in-depth breakdowns of what's going on both fundamentally and technically in the markets. We also drop bonus videos in the Telegram channel, so don't miss out. Come join our Telegram channel. The link is in the description down below. Have a great rest of your day.